Bismillahirrahmanirrahim. Assalamu alaikum. This is Saira Zaman Khan. In today's video, we will continue discussing May-June 2020 paper 1 as MCQ 1 till 9 and 10 till 18 have already been discussed in part A and part B respectively. So in this video, we will resume it from MCQ number 19. Subscribe to the channel, leave your feedback and suggestion in comments and do press notification button so that you can be notified of all new videos which are being uploaded. Number 19 says, annual rental income due from Kumar, a tenant is 3600. At the start of the year, Kumar had prepaid rent of 900. At the end of the year, he owed 2 months' rent. How much rent was received from Kumar during the year? Now, again, to attempt such an MCQ, my suggestion is to do it with the help of a T account, as we are supposed to make an income account. So here we have this income account format. Now, annual rental is 3600. That is, the amount to be transferred to income statement is 3600. Rent received in advance is a liability. So opening liability of 900 on the credit side. At the end of the year, 2 month rent is accrued. Accrued income is our current asset. As an asset closing balance, it's appearing on the credit side, and in the next period, it will appear on the debit side. We need to calculate the missing figure of cash and bank which we have received. Since the missing figure is required on the credit side, so debit side is complete, 3600 here. From 3600, we subtract 900 and 600. So we have our cash and bank as 2100. So during the year, 2100 was received. This is option A. Number 20 says, Jules inventory on 31st December 2019 was valued at 4800. So the value of closing inventory is 4800. It was discovered that goods cost 100 had not been included and goods cost 170 had been included at net realizable value of 210. What was the effect of the incorrect inventory valuation on Joel's financial statement at 31st December 2019? Here, student must remember that inventory is valued at the lower of cost and net realizable value. So, looking at this question, number 100 was not included, so that should have been there. So with 100, our inventory is actually understated. For this one, the lower is cost, that is 170, but in inventory it was included at net realizable value of 210, which is actually higher, so it's wrong. So here inventory has been overstated with the difference of 210 and 170, which is 40. So overall, in number 1, inventory is understated by 100 and here it's overstated by 40. So overall, inventory is understated by 60. Okay, so incorrect effect treatment, inventory is understated by 60. Now, the relationship between closing inventory and profit for the year is direct. That is, if closing inventory is understated, profit for the year is understated with the same. So profit for the year is also understated with 60. Now, impact of profit for the year on equity. As profit for the year is added to equity, so if profit for the year is understated, equity is also understated. So the correct option is option D, where all three items are understated. Number 21. The owner of a business took goods for his own use but forgot to make an entry in the accounts. What was the effect of this error? Now, the double entry to record goods withdrawn by the owner is drawings debit and purchases credit. As drawings and purchases both are not recorded here, so drawings are understated whereas purchases are overstated. Now, the relationship between purchases and profit for the year is inverse. So, as purchases are overstated, profit for the year is understated. For capital employed, both profit for the year and drawings are part of it. Now, drawings are subtracted from capital employed. So the relationship between capital employed and drawing is inverse. As drawings are understated, so capital employed is overstated. Profit for the year is also part of capital employed and it's added to that. As profit for the year is understated, capital employed is also understated with that amount. So, overall, with understatement of profit and with understatement of drawings, capital employed has no effect on it. So, final answer of this is C, where profit for the year is understated and capital employed has no effect. Number 22. Rajit and Sunil formed a partnership on 1st January 2019 but did not prepare a partnership agreement. They provided the following information. Capital introduced Rajit 40,000 and Sunil half of it 20,000. During the year drawings, Rajit 5,000 and Sunil 3,500. Share of work for both of them 50%. They decided to draw up a partnership agreement for future years. Which item would be most beneficial to Rajat in 2020? Now, looking at this, we can see that for Rajat, he is introducing capital double of Sunil. Drawings are higher in his case, and share of work is equal. So, for our options, interest on capital. If interest on capital is to be paid, then Rajat is going to get double of Sunil because his capital introduced is 40,000. So, of course, it's an advantage to him there. So, A is the correct answer so far, but looking at B, C, and D, why can't they be the answer? B is interest on drawings. So, the higher the drawings are, the more interest is to be paid. So, Rajit is actually withdrawing more, so he will have to pay more interest, which is actually a disadvantage to him. So, B is not the answer. C is limit on annual drawings. Again, as his drawings are more, if there is a limit, so he will not be able to withdraw. So, it's again a disadvantage. Partnership salaries will be paid according to the work they perform for the partnership, which is actually equal. So, A is the correct answer, interest on capital. Number 23, Harry and Jane are in partnership. The following information relates to Harry for the financial year. Now, salary 8,000, drawings 2,800, share of profit 4,600. The opening credit balance on Harry's current account was 28,200. What was the closing balance on his current account? It's a very simple MCQ, but once again, the approach should be to do it quickly with the help of a T account, right? It's not going to take long, but it will definitely lead to correct answer. So here we draw a current account. As the opening balance is credit balance, we write it on the credit side 28,200. Salary is credited to current account, so we write 8,000 on the credit side. Share of profit is also credited, so 4,600 on the credit side. Drawings are debited to current account, so 2,800 on the debit side. We need to calculate the closing balance. In this case, credit side is heavier, so we take the total of these three figures, which leads to 40,800. From 40,800, we subtract 2,800 and we get the difference as 38,000. So the correct closing balance is 38,000 as credit side is heavier. So this is credit balance. This current account has closing credit balance of 38,000. So the correct option is option B, 38,000. Number 24 is the statement of financial position of X Limited at 31st December 2018 included the following: ordinary share capital general reserve, retained earnings, and debenture, which is a non-current liability. Profit for the year ended 31st December 2019 was 42,000 and dividends paid total 10,000. What was the total equity on 31st December 2019? Now remember, for companies, when we are talking about equity, we are referring to shareholders' funds, right? So whatever belongs to shareholders should be added. Now what belongs to shareholders? First of all, during this year 42,000 profit was earned, out of which 10,000 was paid. So remaining profit for this year was 32,000. Now ordinary share capital 40,000 plus general reserve of 8,000, because general reserves also belong to shareholders, retained earning of 65,000, and the remaining profit of this year 32,000. These four figures should be added and you will get 145,000. So the correct answer is option B, 145,000. Number 25, which is a feature of debentures? Very simple. A. Debentures are a long-term liability of a company. True. This is correct. B. Debenture carry a fixed rate of dividend. No. Debenture carry a fixed rate of interest. So B is incorrect. C. They carry voting rights. No, they do not carry voting rights. So C is also incorrect. D. On liquidation are paid back after shareholders. No, they are paid back prior or before to shareholders, right? So the correct option is A. Number 26. Which cost is part of the prime cost for a manufacturing business? Now, prime cost is the sum of all direct manufacturing costs. Carriage inward is added to purchases of material, so it is part of prime cost. Carriage outward is part of profit and loss account. Factory rent is an indirect manufacturing cost. Factory supervisor's salary is also an indirect manufacturing cost. So the answer is very simple, A, carriage inwards. Number 27, a manufacturing business provided the following information. We have prime cost, factory overheads, opening work in progress, and closing work in progress. What was the factory cost of production? Very, very simple. We add prime cost, 236,000, factory overheads, and opening work in progress of 8,000. And from the sum, we subtract closing work in progress of 6,000. Answer is 280,000, which is option D. So here we have attempted MCQ number 19 till 27 of June 2020. Remaining 7 MCQs we'll attempt in our next tutorial, inshallah. Hope everybody finds this useful. Please remember me and my loved ones in your prayers. Do subscribe and leave your feedback in the comment section. Stay blessed. Allah Hafiz.